Welcome back. We are now on to the third exercise. This is exercise 1-9, in which we're going to prepare a statement of cash flow. So here we have Tiger Trade that has the following cash transactions. They've given us a list of cash transactions. They've asked us to calculate the ending cash balance, assuming that the beginning cash balance is 5,000, and prepare the statement of cash flow. There are one of two ways in which I can proceed. I'll start out with the easy one over here. They've asked you to calculate the ending cash balance. Now, the easiest way to do this is I know the beginning cash balance is 5,000. I know these are all the transactions, cash transactions that have happened. So the easiest way to do this is add up all these numbers, and that is going to give me the net cash change. When you add up all these numbers, 5,000 plus the net cash change will give you the ending cash balance. But before I get to that, let's just go ahead and prepare the statement of cash flow. Now, in the statement of cash flow, we have in the first line, the name of the company. Here it's Tiger Trade. Second line, I write the name of the statement, which is statement of cash flows. Third line, it's for the year ended December 31st. Since they haven't given me the year, I'm just going to write XX over here. Now, statement of cash flow, I'm grouping all of these cash transactions into three types of activities. So those three activities are your operating activities, your investing activities, and then the financing activities. Operating, investing, and financing activities. In the operating activities, I'll first list my cash inflows, and then I'll list the cash outflows. So that's all very well in terms of laying out all this information over here. I need to go through the list over here and identify what they are. So here's what I'm going to do. I'm going to try and, if I can get this to do it correctly for me. Yeah, I'm going to use the annotation so I can write this down so it's easy later on. So let's go through each of these quickly and see, would it be an operating activity, investing, or financing? Financing activities relate to long-term liabilities and stockholders' equity. Investing activities relate to long-term assets. Operating activities are basically your revenues and expenses. They're recurring in nature. That's how a business stays in business, their operations. Okay, so let's look at each one of these. Cash received from the sale of products to customers. Whenever you see the word customers, you're usually looking at operating activity. Cash received from the sale of products to customers. The next one is cash received from the bank for a long-term loan. That's definitely a financing activity. When you see the word long-term liability, a long-term loan is a long-term liability, that's financing. Okay, so I got the long-term loan, and then they're telling me that I have cash paid. I paid cash to buy factory equipment. Factory equipment is a long-term asset. I'm investing in it, and I intend to use it to help me generate revenues. So this is going to be an investing activity, purchase of equipment. And then the next activity they've told me is I paid cash to merchandise suppliers. Merchandise basically is inventory. So I purchased inventory. The sale of products, I need to buy it before I can sell it. And that's what we're looking at over here. So that's certainly an operating activity. So that is an operating activity. Okay. Now, I had an unused warehouse. I had a warehouse. I wasn't using it. I sold it and I got cash. Now, the question is, when I sold this, what is it? The warehouse for me is an asset. The question is it a long-term asset or is it an inventory item? Obviously, over here, the warehouse is a long-term asset. I had purchased it. I was using it at some point of time. I stopped using it, and now I decided to sell it. So this is an example of an investing activity. I sold the warehouse. When I bought it, it was an investing activity, cash outflow. Now it's an investing activity, cash inflow. Then I paid my workers. I paid cash to my workers, the employees, the salaries. I pay salaries and wages. This is most certainly an operating activity. I paid for advertisement. Again, in order to sell my revenues, sell my products and services, I need to advertise and let everyone know. So just like I keep paying rent. I keep paying for my utilities. I have to keep paying for advertising. I can't advertise once and expect everyone to know I'm there. So this is now again an operating activity. The sale of services to customers, it's similar to the first one where I sold products, which means that's an operating activity. And then finally, I paid dividends to stockholders. This is an equity transaction, which means it is a financing activity. Financing activity. Okay, now that I've identified what these activities are, and I have the skeleton format of the statement of cash flows, the rest of it is really easy. I just need to plug the information into each of these sections. So I have sale of products over here is an operating activity, and that's going to be a cash inflow. Okay, so let me stop that. And sale of products, that's a cash inflow, 40,000. I have one more sale of services. That was the operating activity cash inflow. And I have 30,000. Or let's just go down the list and put them as I see them. The first one was operating. I put that up over there. The second one is financing. Let me put that under financing. The third is investing. So we'll put that over here. Investing, it's a cash inflow. Okay, both of these were cash inflows. Okay. Purchase of factory equipment was before this one, but I switched the order. That doesn't matter as long as you put that in the investing activities. I paid supply for my merchandise. That's certainly an operating activity, cash outflow. So put the number in parentheses if it's a cash outflow. You already have them here in parentheses, but make sure you put them in parentheses here as well. I already put this one investing activity in. I paid my workers. That's again an operating activity outflow. I received then advertising. I seem to be jumping things over here. Okay, advertising, I have 4,000. I already put the sale of services. And finally, your dividends is coming in over here in the final section. Okay, now that I have all this information laid out over here, I can go ahead and add up each of these sections. So when I add up the operating activities, I come up with 30,000 and notice it's a positive number. This is my net cash flows from operating activities. I add up my investing activities. I sold the warehouse, got 13. I purchased factory equipment for 50. So it's a net cash flow of 37 outflow. Do the same thing for your financing activities. And what we have over here is, just correct a typo I have here quickly. And what I have over here is payment of dividends to stockholders, giving me a net cash flow of 39,000. Now, when you add up these three numbers, that is the net change in cash. In this case, it's a net increase. If it's a positive number, it's an increase. If it's a negative number, it's a decrease. Now, if you just go straight down and add up all these numbers, you should come up with 32,000 because that's all I've done. I brought the same numbers here. It's just I've rearranged them in terms of which section they're in. Okay. Now, to this, we are going to add the cash beginning balance. They told us we had $5,000 at the beginning of the year. We said our cash increased by 32,000, which then means my cash ending balance is 37,000. So they had asked you in the part one, what's the ending balance, assuming beginning balance is 5? 5 plus all these numbers put together is 32. 5 plus 32 is 37. So the answer for part one is 37. For part one, if that's all you are asked, you don't have to prepare the statement of cash flow to answer that question. But since I was asked for a statement of cash flow, I went ahead and prepared that and show you how I came up with that same 37,000. So this is the statement of cash flow. The next video, we'll work on exercise 1-12.